Let's take a look at your market news now. Asian shares were dragged to near two-month lows this morning by Chinese markets, which plunged on their first trading day after a long break on fears that the coronavirus epidemic would hit demand in the world's second largest economy. Aiming to head off any panic, the Chinese government took steps to shore up an economy hit by travel curbs and business shutdowns because of that virus. So despite the support, Chinese shares were deep in the red. Japan's market dived to the lowest since November. Now, the Nikkei in Japan lost over 1%, closed at 22,971 points. The Hang Seng in Hong Kong was positive, but mostly unmoved at 26,326 points. And the Shanghai Composite collapsed 7.7% to close at 2,746 points. Wall Street's major averages tumbled more than 1.5% on Friday, sealing its worst week in 6 months as the spreading coronavirus outbreak, coupled with sluggish U.S. economic data and a mixed batch of corporate earnings, fueled concerns about global growth. After suffering its biggest one-day percentage decline since October the 2nd, the S&P 500 is down more than 3% from its closing high, hit earlier in January as businesses struggle with supply problems from that coronavirus epidemic that has killed 213 people in China and been declared a global emergency. The Dow Jones Industrial Average fell over 2% to 28,256 points. The S&P 500 lost 1.8% to close at 3,225 points. And the Nasdaq Composite dropped 1.6% to 9,150 points. Let's get more on the market news now. We're close to my colleague, Arabile Gumede. A very good afternoon to you, Arabile. What's moving the market today? And are our markets as hard hit by that coronavirus as the ones we've just spoken about?
Yeah, they certainly have been, Nzinga. Good afternoon to you. It certainly has been a market that has looked to find some sort of relevance, I suppose, outside of the coronavirus. Very difficult to find any, though, as the markets continue to languish and head down as well. It was another week of red trading as well across the JSE just last week, and that continues to be the case today. Only the industrials managing to find some sort of positive territory as we begin to kick things off today. As you said a little bit earlier, the Shanghai Composite, a massive fall there of more than 7.7%. Of course, let's remember they did have that lunar break, so that does mean that as they come back, it's a bit of a shock to the system there as things go down as much as 9% at some stage. And of course, things begin to blot out as 10% hits, and that market would have stopped trading if that was the case. So certainly interesting on that front as to how the coronavirus will continue to affect markets. The death toll continues to rise, and I think that is a key reason why we'll see markets rather continue to be in some negative territory until some sort of containment of that virus. It has affected things across the board as well as we begin a new month. Even the local currency having faltered beyond 15 Rand against the US dollar last week, Friday, it has now fallen off quite substantially, more than 7% this year alone, a 4% fall just last week. So certainly hurting the local currency. But with that, let's check in on the numbers and see exactly how things are faring, and we'll get into the details right after this. Well, as you would have seen there, the market, particularly the currency at 14.91 looks slightly better than the 14.99 we had gotten just rather early this morning as well. Then, having traded just below that 15 Rand mark, whether it will stay there rather sustainably is going to be a key question. But in some of the big news as well today, Tongaat Hewlett has returned to trading on the Johannesburg Stock Exchange. Just thought we'd take a quick reminder as to how things fall halted and where things were exactly. It's a company with a market cap of around 2.2 billion rand. And in June last year, they decided to suspend their trading on the JSE and the London Stock Exchange. Average revenue annually then of around 15 billion rand there for Tongaat Hewlett, of course, before things got bad from worse to where rather, should I say, as well. If we continue to check in on how things fared as well, then after that market cap having fallen, the reasons for this was the sale of an incorrectly counted for land sale, which was worth around 3.5 to 4.5 billion. So a misstatement of their financial results then for up to 4.5 billion rand. They must reverse that and accordingly, which would certainly have changed things around for Tongaat Hewlett. And it was quite significant that that amount was material for their financial statements for the year ended March 2018. If we continue to unpack that just a little bit more, then on to the next graph. It was, of course, audited by Deloitte for around 15 years, and Deloitte in a bit of trouble then, of course, because they had been the auditors for Steinhoff as well for quite some time. Urba did launch an investigation into Deloitte's work too. PwC did, of course, get into a report with them and did try to get some help into understanding certain practices which could impact past reported financial info for PwC too. So that was key to where they sat. Both the former CEOs and CFO did, of course, resign before the August AGM in 2018. Peter Stodier, the CEO there, former CEO of Tongaat Hewlett, made 13.5 million rand in 2018 in terms of his financials, and 20 million rand there in 2019 too. Just, of course, we continue the reminder of where the Tongaat Hewlett story goes to. They have a 250% fall in sugar imports, and new sugar tax certainly impacting the company. As of June last year, they had said that they would cut over 5,000 jobs. So certainly a lot of hurt for the company that is Africa's biggest sugar producer as well. So that kind of tells you the story. This is where the price was before, or as they decided to stop things at the end of, or rather in June last year, the CEO and the CFO announcing that they would leave at around August 2018. Then in October 2018, we saw them officially leave the company. Then in February 2019, announcing that possible drop in earnings of around 200%. And then in June, agreeing and announcing that they certainly did have a misstatement of their financial results. So they halted trading at 13 Rand and 21 cents in June last year. Now let's check in on how that graph sort of looks this year as well, and I'll just ask if we can perhaps get that graph sort of just behind us as well, and hopefully we'll get our camera person to take a look at that graph for us. I am joined as well by Gary Boyson then from Rand Swiss, who does join us here at the JSE. Gary, 13.21, a massive fall now to just below that 5 Rand mark. Not surprising really that in that time that they've suspended shares to now, investors just like, even if you come back, I'm still fleeing this.
No, absolutely. So this long sort of straight line that you're seeing here is that the stock was under suspension for 7 months.
Yeah.
So it wasn't actually trading. Today is the first day that we're getting trading back in the stock. So remember, when you suspend a share, as suspending Tongaat, you're not necessarily punishing the executive and the management of the company. You're actually punishing shareholders. You're punishing anyone that has gone and bought Tongaat shares in the past. Now, obviously, we know that there's been material misstatements in their financials. So this is not necessarily shareholders' fault. But yet they are essentially being punished because they couldn't access the stock to sell it off. Today's the first day that it's now trading, so anyone that was stuck in that period holding Tongaat shares is probably just coming to the market today and saying, I can finally get out, let me salvage what I can. And what's happened is you've obviously got this serious discount. Now, there's always a lot of trade. When anything lists or when it is unsuspended, you get a lot of volatility around the share price as well. So I had a look at the volume numbers, so just the number of shares traded. Typically, we're probably about 10, 15 times at lunchtime today. We're 10, 15 times above where Tongaat used to trade on average. We're actually heading, at lunchtime, we were heading above what happened 2 days before the suspension. So, I mean, there's an enormous amount of shares changing hands today, and I think it's just investors finally coming back and saying, well, actually this thing is now liquid again. I can exit my position.
A suspension of share trading like this, possibly, as you said, unfair then to anybody who's a market participant, because they feel like, well, allow me to actually be part of the process, allow me to make a decision for myself here as well.
Absolutely, because if you remember with the Steinhoff issue, one of the criticisms that the JSE came under is, why haven't you suspended Steinhoff shares?
Sure.
And their view is, if we suspend the trading in the shares, we're not allowing markets to function correctly, and we're actually punishing the people that are currently holding the shares. We're just further punishing actual investors. So what happens now is essentially you can get a flow of capital. If you were buying Tongaat, and Tongaat, there was, before obviously the accounting irregularities, there's very good reasons to have bought Tongaat. It's not just because you wanted to access a sugar play. There was a large property portfolio that they were planning to unlock value from. You potentially could have been a much more conservative investor. Now, having looked at restated financials, having looked at having received more information about the company, a very speculative investor might find this share much more attractive, and you're seeing a transfer then of those shares from the more conservative investors to the speculative investors, and once again financial markets should operate as they should.
Would you get in at R5 a share?
It doesn't fit our mandate, unfortunately.
So that's a politically correct answer.
No, absolutely. I mean, we've obviously got a responsibility to manage money according to the agreements that we have with clients. So we are not speculative managers that would buy something like this.
Sure.
Whether as a private client I might go and take a little dabble at Tongaat 62% down for the day.
Sure.
I think there probably is a trading opportunity there, because as I said, when you suddenly get a stock coming back to market, you'll see huge volatility. So if you're planning on getting in and out, there could be money to be made.
Certainly. Just depends on how much and at what risk you're willing to go at it on. Okay, hopefully we'll get the board onto today's trading and onto the other picture as we move on now as well. It's been negative as well. Shanghai Composite, that coming on board as well today, a massive 7.76% for almost 9% at some stage as well. That's really big. The coronavirus is really making an impact here as well.
Yeah, so if you look at just the disruption of goods and services, and I'm going to speak about the coronavirus from an economic point of view. So absolutely, there's been deaths. We are sensitive to that, but this is a business show, so we have to try and divorce ourselves from that and look at the actual economic impact.
Sure.
And the economic impact has been large. With the shutdown of Wuhan and a number of cities in China, the disruption of goods and services is significant. I mean, there's been estimates that China's GDP, which has been growing at around 6%, could fall as low as 2% for this quarter, which is absolutely astounding. That takes us back to kind of days of Chairman Mao kind of growth in China. So this is going to have a massive ramifications, and it's not just for the Chinese economy, it's going to be for the global economy as well. So if you look at last week, we had the likes of Starbucks, which operates just over 4,000 stores in China. Half their stores are closed. Now, they're a good example, because many people are saying, but with the disruption of goods and services, potentially if I was going to buy a luxury watch from Richemont, I'll just delay the purchase. When everything comes on stream, I'm still going to spend the money, and you almost see this boost in spending once things get back to normal, if they get back to normal. What you've got, though, is in the Starbucks example, if you don't drink a cup of coffee for 5 days, you're not going to suddenly go and drink 6 cups of coffee on the next day. So there's a real economic impact to this virus, and it's a significant economic impact. And I think with the markets having been closed over that Lunar New Year holiday, which was extended, you're just trying to see markets now catch up with what with the rest of the world. And China is also a very retail-driven market, so it's not institutional investors. And when people are finally, again, they have the ability to exit, they do, and that's why you're seeing the market down as much as it is. Final point on that, though, you mentioned earlier that 10% down was the circuit breaker level. That's essentially where they would have actually suspended trading in the Chinese market, so that they don't have a disorderly rout and a sell-off. But remember, the People's Bank of China actually is stepping in with open market operations today, which means they're supplying liquidity to the market. They've also $174
billion odd.
They've also banned short selling for the day. So to see a market down as much as this on a day where you've got liquidity injections and essentially a central bank standing ready to buy stocks in the open market, plus a ban on short selling, and it's still down 9%. You can just tell the level of panic that investors are feeling in China.
Sure. It gets worse and worse every time you say another word. I'm going to stop you right there so it doesn't get any worse. Thank you so much for the time. Gary Boyson there from Ransford joining us here at the Johannesburg Stock Exchange. That market picture, dreary unfortunately. 0.4% down for the JSE All Share as well, following that global market sentiment, unfortunately, with the industrials the only ones to have picked up today. The resources down in the doldrums. South Africa's rand around 14 rand 90 against that US dollar. That is where the buck stops, right here at the Johannesburg Stock Exchange. My colleague Nzinga Qunta joining you right after this. Do stay tuned.